Hello and welcome to another episode of Not Financial Advice, Just My Opinion with me, Christian Rauchenwald. Now, as always, in today's episode, we're also going to take a look at some of the positions that I'm holding within my eToro's Popular Investors portfolio. And if you're curious about that portfolio, you can check it out by following the link in the description or the first comment down below. I'm going to show you why I'm holding certain stocks, why I think buying them right now is a good idea, and what kind of profit target I expect to hit with those positions. Now let's get started by taking a look at my recent performance and my portfolio in general. So I'm going to share my screen with you guys, and as you can see here, during 2021 we are currently looking at roughly 70% in return. A very bad February with minus 11%. That actually happened because of the buying restrictions that suddenly came into place with GameStop. An insane January that also mostly is due to GameStop, and a decent March so far, although it started off negative as well. My overall goal for this account is simply to achieve more than 10% return per year. So far I'm doing a great job at that. We will see how the future develops and if I'm able to maintain that. Obviously, months like January are going to be very, very rare, and even months like March are something that will not be the average situation, but I'm not going to complain about having a good start into the new year. We can also see that my risk score overall increased during those last couple of months, and that's because of the high volatility in our GameStop positions. Now, if we go to the portfolio tab and we sort the positions based on the invested amount, you can see that GameStop now is actually one of our smaller positions with 6.51% of our portfolio invested in GameStop. Now, during January, our GameStop position used to be bigger, but I took profits along the way to prevent the risk score from getting out of hand, which proved to be the right move because after that we had the drop from $480 per share down to again $40 per share. So we took a lot of profits here. However, I want to point out that I only did that because on this account I'm not just trading with my own money, but the few copiers that I have also invest their money the same way I do, and therefore I'm paying more attention to keeping the risk to an acceptable minimum. Now, going back to the portfolio, we can see that our biggest position currently is actually in Bed Bath & Beyond, and overall we are at a 7.5% profit right now, although some of our position, this one here, is currently still at a 10% loss. As you can see, I didn't just open one position, but I entered the market and then the price kept dropping a little further, so I opened more positions. Now, looking at the chart for that stock, you'll see a lot of numbers on my chart and a few letters like ABC. Now, the reason why there are those numbers and letters on the chart is because I'm using something called the Elliott Wave Theory for my trades. And it's something that a guy called Ralph Nelson Elliott came up with in the 1930s. He looked at a lot of charts and detected those patterns and eventually defined rules that outline how those patterns go. And they pretty much allow me and other traders to predict what the market is going to do. I know that sounds insane, but I'm going to show you two examples right now where I used Elliott waves to predict market movement that proved to be highly accurate. And if you want to learn more, I have a physical hard copy of the Elliott Wave Principle book, but you can find a link in the description down below that gets you to elliottwave.com, and there you can just enter your email, pick a password, and read the book for free, or also order the physical copy for $29 if I'm not mistaken. Now let's take a look at those examples. One of the most discussed stocks recently is GameStop, and I'm also following it closely because I'm also heavily invested into that stock. Now, if we look at this picture here, you can see that Elliott Waves on January 25th predicted a price target or a range between $318 and $363 per share. Again, on the 15-minute chart, as you can see on the background, for GameStop on January the 25th. Now, I've opened up that chart as well on tradingview.com, and we can see that would have been the area here where the prediction was made. And we can see that within 2 days, the stock actually ended up reaching that area of 318 to 363 and moved sideways within that area for some time. Now, at the time when I made that prediction, or when Elliott Waves helped me to make that prediction, I was also sharing that theory on a comment on Reddit. And one user, once it came true, asked what would happen next. Now, unfortunately, I didn't take a screenshot of the next prediction, but I actually wrote a comment, and I'm going to show it right here. And the comment reads, I haven't updated for the last 2 hours, but it says down to 137 to 207. And then we actually take off towards $4,000 per share. Now looking back at the chart, what really happened, we can see that actually a drop followed into the range of 137 to 207, and after that we did not see the takeoff because we also had the buying restrictions put in place. So in my opinion, market manipulation done by Robinhood and other brokers that prevented the short squeeze from actually starting. But as you can see, the predictions made in that specific scenario proved to be highly accurate. Although GameStop is one of the stocks that currently doesn't follow all the rules because, as we know, there's a lot of activity and a lot of hedge funds trying to do things that they usually wouldn't try to do. In my opinion, they are manipulating the market, but still overall Elliott Wave Theory proves to be accurate, at least from my perspective. Now there's a ton of other examples where Elliott Waves prove to be very accurate, and I really recommend that you check out the book. Again, you can do so for free by using the link in the description down below. It starts off by providing some examples that are already 100 years ago and where Elliott was able to not only predict how far the market will drop, but also roughly when it will drop based on his own principles. Now that we've clarified why I rely on Elliott Waves and I provided you with a way how you can learn about them yourself, let's talk about how it actually works. I'm not going to go through everything because if it would be that easy, there wouldn't be an entire book about it with a couple hundred pages, but I'm just going to show you the basics. Basically, what Elliott says is that the market always moves in waves, and you can see that there are a couple of zeros here. So we have the first zero that goes up to 1 here, the second one here, and the third one here. Now there are impulsive waves like this one, 1, 2, 3, 4, 5, and then there are corrective waves like this one, which is a zigzag going A, B, C. That knowledge alone doesn't help us that much, but we can take it further because there are obviously other rules as well. For that, I'm going to switch the chart to be logarithmic, and so we see it more clear. Now, one of the things that make up Elliott rules is, for example, that we can also say that wave 2 to 3, so this area here, has to be another impulse wave. So in here, we would also have to find 1, 2, 3, 4, 5 to confirm that that actually is a full wave. Now there are some exceptions like extended waves and so on, but for the purpose of this video, this is pretty much enough. So we know that this area from 2 to 3 here also contains another 1, 2, 3, 4, 5. As a result, we also know that this wave here is part of a bigger wave. In this case, it's part of wave 1 here. And as a result, the 1, 2, 3, 4, 5 pattern that's going to play out with this wave is going to be part of another bigger wave and so on. So there are ways to confirm if the patterns are actually following Elliott Wave Principle or not. And if they don't follow Elliott Wave Principle, it means that I labeled something wrong and that we would have to start over again. But you get the idea. Now, if we look at Bed Bath & Beyond, we had the huge spike here, which is our wave 1, according to the way I've labeled it, followed by predicted correction into the area that we actually saw. And assuming that we don't see the bottom of that area here at $20.90, this would make this here our wave 2, indicating that from here on we have a wave 3, and in this case wave 3 means the price will go up again. Now we also know that the wave between 2 and 3 has to be another impulse wave, so from this starting point, assuming that the 2 here is correct and that there will not be another drop first, we can actually already see that it starts to form 1, 2, expecting wave number 3 to reach the area around $40. From there we would see a wave 4, but it cannot go or cannot reach the price area here at 31 roughly, and then we would see a wave 5. So that's the reason why I'm into Bed Bath & Beyond. I'm obviously aware that they are retail stores and they suffered from COVID and so on, but I can also see that even with COVID that their stock price has been climbing quite steadily, and so I'm fairly confident the price will actually go up further. Now we may see drops in between, but I don't expect them to go actually too far. I expect them to be minor, and I'm just going to keep holding our shares here because overall I expect a more than decent payoff over the next couple of months from our investment into Bed Bath & Beyond. Now going back and looking at the portfolio, we can see that there are a lot of other positions, and if we were to look at all of them, this video would be a couple of hours long. But rest assured that all the purchases made here are also made based on Elliott Wave Theory. Now one thing I missed here is our Palantir investment. Because I was focused so much on GameStop, I actually missed the huge spike, which however is not a problem because it just means that we'll have to wait for the next wave, which should actually exceed the high that we already saw and will make even more profit. Now it would have been smarter or better if I would have paid attention to that stock, but that's a mistake on my end. and we could have sold at the top or close to the top of wave number 1. However, if I then consider that my neglect of that small Palantir position actually resulted in our incredible 66% returns in January because I was focused on managing the GameStop positions properly, I don't really mind that we missed that small profit along the way. So we're just going to hold here because, again, I expect, based on Elliott Wave Theory, that the price for Palantir will increase further in the next couple of months and that we actually end up making more profit than we would have if I would have not missed the top of wave number 1. Now, one stock I, however, want to cover before we end this video is GameStop, because again, in my opinion, it's a once-in-a-lifetime opportunity, but that's just my opinion and not financial advice. Hence the title of this series, just my opinion, not financial advice. But I still want to show you how I see GameStop based on Elliott Wave Theory. Let's start off by looking at the monthly chart for GameStop since 2002. And in my opinion, what's going on here is an impulse wave that starts down here, has its wave 1 up there, its wave 2 down here, up, down here, and its wave 3 up here with our wave 4, the drop that happened because of the buying restrictions, and we're now waiting for wave 5. So overall, and I'm gonna lock the wave lines so that we can see it better. Overall, that's what I think we see right now. And according to this, our wave 5 would at least reach 750 per share. Personally, I think that's the point where we will see the short squeeze and where things go really crazy and the price will go much higher. But we can see that I'm able to apply Elliott waves here as well. However, I'm violating a few rules here. One of them is that wave 4 never retraces or very rarely retraces into the area of wave 1. And the reason why I'm willing to ignore that rule is because the dip here, or the extent of that dip, only happened because buying got restricted. If the buying would not have been restricted, we might have seen a drop, but it would have not been that far. So I'm confident in that labeling. Now, obviously, we also need a way to confirm those waves. And as mentioned initially, each wave contains subwaves and itself is part of a bigger wave. For that, we can, for example, check the wave 0 to 1 here, and it should contain another impulse. So it should contain another 1, 2, 3, 4, 5. And in that wave, wave 3 cannot be the shortest, and I'm fairly confident that we fulfill all the requirements to confirm that this actually is one impulse wave of a smaller degree, which makes this here, in my opinion, the correct labeling. Now, the correction here from wave 1 to 2 has multiple options. It cannot just be a 1, 2, 3, 4, 5, but I'm also confident that it matches here. And the same applies then here from wave 2 to 3. It should be another 1, 2, 3, 4, 5. And if we take a close look, we can actually get this done as well, because we would have our 0 here, our 1 here, our 2 here. Our 3 would likely be here with a small correction to here, our 4, making this our wave 5. And again, it applies. Wave 3 would not be the shortest, wave 4 doesn't overlap into wave 1, and so on, which for me is enough confirmation to see that this pattern is accurate. But obviously that doesn't help us to see what's going on and where we're going, so we're going to switch to the hourly chart for GameStop. And on that hourly chart, I'm going to zoom out and go back till April last year, where we had our basically wave 2 on the monthly chart, and therefore it's the start of another wave. So that one here. And here I'm just going to use the magic of wave bases to automatically draw the waves onto the chart. Now, those wave patterns that are created automatically are not always 100% accurate, and they require some modification, so don't just rely blindly on them. But personally, they save a lot of time because they already get most of the job done, and you just have to validate what they did. Now, if we zoom in here on the hourly chart, we can see that it predicts wave 1 at the top here, which would align with our assessment on the monthly chart that this top here is actually our wave 3. It predicts wave 2 at the low here, which would align with our assumption that wave 4 is actually at this low here. And based from that, we can then simply project the pattern forward. And I'm also gonna make it visible or lock it, so all smart tools. And when we then scale a little bit, we can see that the overall price target based on this movement is actually in the area of around $10,000 per share. And that would be the tip of wave number 3, following a correction and then wave number 5. Now, if you now get super excited about wave number 5 going beyond $10,000, I want to point out that wave number 5 in some cases can be truncated, which means it might not reach the same height as wave number 3. Personally, I expect that we'll see prices north of $10,000, but I just wanted to point out there is a situation that aligns with Elliott Wave Theory where that would not be the case. All of that is obviously quite interesting, but that's the biggest wave we are looking at right now, so let's dig in a little bit deeper in the immediate area and the smaller waves that are within. Now, if we look here, and I'm going to scale this again or set it to auto scale, you can see that it predicts a wave pattern here, but within that wave pattern there are multiple rule violations. One of the most crucial ones here would be that wave 4 retraces into the area in wave number 1. So this pattern here is likely not correct, so we would have to figure out what's actually going on. And in my opinion, the way it should be, it would make this here wave number 1, the drop here wave number 2, and then our high here, this one likely wave number 3, and this tip here wave number 4, predicting a wave number 5. So you can see that the predicted price areas move as well at the top here, which again fulfills the requirement. Now, there are some cases where Elliott impulse waves don't consist of 5 waves but potentially 9 waves, but even if that is the case, it's still always possible to simply label it as 1, 2, 3, 4, 5 like I'm doing here. Now, as a result, assuming that this here is wave number 5, because now we are fulfilling all the requirements, we have our 1, 2, wave number 3 is not the shortest, wave number 4 does not retrace into wave number 1, and we have our wave number 5 that also hits the area that is expected to be reached. It would also confirm that this here can be our wave number 1. And if we log that real quick, the support resistance here, you can see that it expected the retracement into the area of 141 to 200, which happened yesterday. On top of that, after each impulse wave, so we have our 1, 2, 3, 4, 5, we have a correction, in this case a zigzag of A, B, C. Now you can see that we have 0 to A, it predicted the range of point B and it actually applied, and the range for point number C is also aligning and overlapping with the prediction for our wave number 2. And interestingly enough, if you look here in this area, you can see that we still have a gap that hasn't closed around the $140 mark, which would also fall into that area. Now, it's possible that we won't see a retracement down here so that this gap will not close, but honestly, I wouldn't be surprised if in the near future we would see another drop that actually goes down towards 140, 130, closes this gap, confirms the price range for the ABC zigzag pattern, and then gives us our wave number 2 point, and from here our wave number 3. Another reason why I think this is possible is because if I'm going to use some tools to draw on the screen, we can actually draw a trend line that goes from the top here through roughly like this. And that would indicate that the price is likely to bounce here and fall back down. And then we could draw a parallel trend line to that. So if I'm again using the line tool here, I'd say the trend line would roughly go like this. So it's roughly parallel to what we've seen. So what I think is a likely scenario is that the price will bounce somewhere here and then fall until it hits this range here, likely to 140 to also close that gap. And then from there we will have our wave number 3 that actually takes us north. Now, if we close that here, so we see the chart again, I can also again like predict or project the pattern. So that would be wave number C, which personally again I expect to be somewhere here. And I can do the same here for wave number 2, project pattern. We would see wave number 2 is projected to go here, but personally I expect it to go here. Now the funny thing, I'm going to pull them a little bit apart so I see them better. The funny thing is I can also lock that here and we can zoom out, and we will then see that it shows us a wave number 3 at around $2,000. Now the original projection is a little bit higher because the original projection assumes that it's like here, so it would be around $2,200. And then based on that, we would see another retracement, which doesn't go that far, and then we would see a wave number 5. And that wave number 5, although I'm not sure I can zoom out enough, we're going to try to do that. We have wave number 4 here, I'm going to scale that. And as you can see, that wave number 5 prediction aligns with the overall prediction of a price target of $10,000 for this wave here, which is our prediction for wave number 3 of the higher magnitude. And if we were to follow up on this wave number 2 here, we would see that the next prediction would actually be that from there we'll have a drop roughly to maybe even $7,000, and then our wave number 5 takes off and takes us way beyond $10,000 per share. Now obviously it's possible that I mislabeled some of the waves on the chart, but basically that's the reason why I'm holding and why I expect to see $10,000 per share. And some of you might call me crazy for considering the possibility that there will be a peak at maybe even $100,000 or more per share. But from where I'm sitting, in my opinion, GameStop is still heavily shorted. So we're talking about more shares shorted than are available for purchase, which means once we start a short squeeze, so once we get to a price where short sellers get margin called, they are forced to buy at any price on the market. And if they still have more than 100% shorted, it means that they will have to buy every share that is available more than once. And they will be forced to do so at whatever price the market asks. So if some trader or investor sets a sell limit order at $1 million per share, there is a high chance that that order will actually be executed, in my opinion, assuming that shorts still have more than 100% of the available shares shorted, and that one of them, of the bigger ones, get margin called to force a lot of buy pressure, drive the price up, and pretty much get all of them margin called, which forces them to buy at whatever price is possible. Now obviously the biggest question here is when to sell. For me personally, I will follow Elliott waves that predict the profit targets, and I assume that because of the buying pressure that a short squeeze would create on the market, that we will actually see higher prices than what is predicted based on Elliott waves. So I'm going to wait for prices to go past what Elliott waves predict, and once they reach a certain top past the wave number 5, and we have a 20-30% drop, that's when I'm going to consider selling. Now let's assume I'm totally wrong here. I labeled everything wrong. Elliott waves is crap, the shorts have already covered and so on. I still don't care, to be honest, because I see that GameStop has a bright future ahead, considering the changes that Ryan Cohen already implemented and that they're going to implement in the future. I'm very bullish and think they will manage the transition from being an outdated retail store to a great online business. In fact, they're already doing so. They use their stores as delivery hubs. They offer same-day delivery where people report getting orders delivered within 1 or 2 hours in a lot of cases, and so on. They close unprofitable stores. So they're really doing a lot to make sure that they actually manage the transition. And so if there is no short squeeze, if we don't see $10,000 per share, I personally still don't care, because I'm still convinced that within the next couple of years, GameStop will trade at $1,000 per share anyways. And in that case, my short squeeze gamble, which has been profitable for the people copying my portfolio to the extent of 50% this year already, is actually still paying off. It just turns my positions into long-term investments versus short-term insane profits, which again I'm perfectly fine with, because either way, in my opinion, GameStop has a bright future ahead. We're going to end this video with that because it already got a little bit too long. I try to keep things shorter, but it's always hard when it comes to investments, because you always want to make sure to provide enough information why you do certain things and what you base them on, and not just say, that's what I buy. Now, last but not least, don't forget, as always, everything you saw in this video is just my personal opinion, not financial advice. You'll have to do your own due diligence. You have to check for yourself. Maybe get a copy of Elliott Wave Theory, or maybe follow the link in the description below to read the book for free online, so you see for yourself how accurate Elliott waves proved to be in the past. And because I know somebody's going to ask if Elliott waves also apply during short squeezes, I recommend that when you start reading the book, also look up the charts for the Volkswagen squeeze and the charts for the recent Tesla squeeze in late 2019, if I recall it correctly. And you will surprisingly see that those squeezes also follow the 1, 2, 3, 4, 5 pattern of an impulse wave, and Elliott Wave Theory applies there as well. Now, the price targets that get predicted based on Elliott waves may be slightly off, but still the pattern stands and holds, in my opinion. Thanks for watching. See you soon in one of my other videos. Till then, bye-bye.